Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real options trades in real time together. Let's get right into it. Alright, first things first, if you want to follow along, make sure you have your brokerage account open and ready to go. Have a calculator with you in case you want to do some quick math. And also please remember, this is for entertainment purposes only. This isn't financial advice. Alright. So first thing we're going to do is check our open positions. We got Qualcomm right here. And that should close soon. We're trying to get to 24 cents. We sold a call vertical. Next, Upstart, 25 cents is what we're looking for. It's not moving in our favor right now, but that's okay. We have plenty of time. We have October 20th is our expiration, so we've got about 3 or 4 weeks till then. Macy's, same thing. We rolled this from September to October. Still not moving in our direction, but we have time and we can always roll it again. All right, let's see what we can find in open new today. Okay, first let's look at Cisco, CSCO. They're in the news today because they acquired Splunk. So Splunk is up big, but there'll be nothing to do with their options. But for Cisco, let's see if we can find something either in the monthly October or for the November 3rd expiration. Okay. If you want to look at the monthly, what you sell puts, I'd sell the 51 and buy the 58. Let's do some quick math here. With the 51, if you sold that 40 cents, minus 48 is 9, divided by 2, divided by 200, that's a 7.7% return, okay? That expires in 29 days. That's actually not a bad one. 51, that would be 40 cents. Minus 48.9, sorry. Divided by 2, divided by 300, 5.1%. That's actually not a bad one. Let's go ahead and open that. So we'll sell 51 and buy 48, okay? Earnings just are in November, so we don't have to worry about earnings. Here's our chart. Big move down today. So sell 51, buy 48. So we'll go here to verticals. And we'll change the width to 3. On the puts, sell 51, buy 48. All right. So we'd be selling 51, buying 48 for October expiration. They're both puts, and we're going to go ahead and pick the ask. And so we'll receive 32. We'll preview that. So we'll buy 148 put to open and sell 151 put to open. We're going to receive $32. Okay, we'll send that out. You see it's open here. Okay, if it gets filled, we'll handle that together. Next, FedEx, FDX, they had earnings today. Earnings were today. Here's the chart. Up big, but not up that much. And when you have earnings and options post-earnings, volatility is really sucked out, so the prices go down. Let's see if there was anything we could do here. For the monthly, if you want to sell the 280, buy the 285. Let's see what we got here. So that's 165, 280 minus 50, divided by 2, divided by 500. 164 minus 90, divided by 2, divided by 500. 7.4% return. That's not bad at all. Liquidity is not the greatest though. See, we got 143, 171 spread. That's not ideal. It's very liquid. So if you want to roll or get out of it fast, you'd have some problems. Same thing with the expiration, 43 days to expiration. Not a lot of liquidity, not a lot of volume or open interest. I think we'll skip FedEx for now. On the put side, same thing, not very liquid. Okay, next we've got Instacart. I don't know if they have earnings coming up, but I know they just started trading. Earnings doesn't say. Okay. Here's our chart 3 days in. There are options available. Not very liquid though. So we'll skip that one. Let's look at ARM. ARM recently had its IPO as well. Earnings doesn't say. Here's the chart. A lot of movement in the past 5 days as it's newly trading. A lot of movement to the downside. Options are now available, but same thing, not a lot of volume, not a lot of great liquidity. We'll skip this one. Let's go next to Broadcom, AVGO. Earnings are in December. Here's our chart. No bias either way to the upside or the downside. Our Cisco vertical was filled, so now what we're going to do, it was filled at 32. Here it is in the column here. So what we're going to do is we're going to set a close order, okay? So 16 cents. So we'll sell one of the 48 put and buy one on the 51 put. And we're going to set this as good till canceled. So it'll be available here every single day until we close it. Okay? We'll preview that. And this is all to close. Put vertical. We'll send that out. Okay? So here it'll just hang here with the rest of them until it's filled. All right, let's keep going back to Broadcom. On the put side. If you want to sell, not a good lot of liquidity here, 40-point spread. Same thing on the call side. What do we have? You'd want to sell the 870. Same thing, 40-point spread. If you went down to the November 3rd expiration, not a lot of room here. Same thing, not a lot of liquidity, no volume, no open interest here. So we'll skip Broadcom for now. Next, TKO. Down 13% today. When our earnings, doesn't say. Newly trading. Here's the stock chart. Options chain, very illiquid, so we're going to skip this one too, okay? You want highly liquid options. KB Homes is next, KBH. Earnings are November 20th. That was yesterday? Sorry, September 20th. Down today, but not down too much. Let's take a look at the options. For the October monthly, same thing, not very liquid. If you went down to the 43 days till expiration, same thing, lacking liquidity. So this one's a no-go too. And finally, Carvana, CVNA. Earnings for Carvana are in November, so we got a lot of time there. Here's a look at the chart down. No bias either way towards the calls or the puts. We'll take a look at the options chain. On the put side, if you want to sell the 30 and buy the 25, let's do some math on that one. So if you sold the 30, you'd get 67 minus 32, divide that by 2, and divide that by 500. That's only a 3.5% potential return. We'll skip the put side. On the call side, you have to go all the way out here to, either the 55 or the 56. Take the 56. You would sell the 56 and buy the 61 on the call side. I wouldn't do the call side naked. I'd always do a call spread unless it's some kind of ETF. So if we sold the 56, you get 143 minus on the 61, 87. Divide that by 2. Divide that by 500. That's a 5.6% return. If you sold the call spread, okay? If you sold the 56 by the 61, October expiration. Not a lot of time left for that one. 29 days till expiration. You have to roll that if we didn't have anything happen in the next week or two. So let's take a look. 56, 61. Where's that on the chart? We zoom out. 56 is up here. This one's not bad. It's had this big move up. We'll possibly come back to Carvana. That's not a bad one. All right, next. That's it for that list. Next, we're going to go to an IV rank scanner that I use. And we're going to sort by volume. Okay? So this hasn't happened in a while. The SPY and the Qs all have higher IV rank. Let's take a look at the SPY. It's hard to trade the SPY and the Qs when there's such low volatility. Now that we have a little bit of an uptick in volatility, let's see what we got. Want to stick to the monthly? October. Want to go out and sell on the put side. Sell the 417. Maybe in the 420. You sold 420 and bought 415. What would that get you? So 252. And you bought the 415. That's 185. Divided by 2. Divided by 500. 6.7% return. So if you want to sell a put spread on the October monthly, you'd sell the 420, buy the 415. What's great about these is they're very, very liquid. So you can get in, you can get out, you can roll very easily. On the call side for the monthly, sell the 453 and buy the 458 on the call side. So that would get you 1 even minus 43 divided by 2 divided by 500, 5.7% return. That's better than what it usually is. Usually there's hardly any volatility here in the SPY. So you're risking $500 on the spread to make a 5.7% return. Expiration's in 29 days. If you want to go out to the November 3rd, which is 43 days out, ideally that's where you want to be. I'd skip it. I'd stick to the monthly if you want to do something in SPY. I'm going to skip that one for now. Same thing with the Qs. It'll be pretty much the same story. SQQ 33. That's just a inverse of the Q, so I'm going to skip that one. Same thing with the TQQ. Netflix, they have earnings on October 18th, so that's a little less than a month from now. So you've got some time if you want to do something in Netflix. Let's take a look at Netflix together. NFLX. Just to confirm, earnings are on October 18th, so we want to be aware of that. Me personally, I have no bias for the call or the put side. They've had this move down recently, so if you want to sell puts, let's take a look. Let's see if we can go out to the November 3rd expiration and see how liquid it is. Not a lot of volume and there's hardly any open interest, so we'll skip this one. It would make more sense to go to the monthly and then in the next week or two roll it if there's no move, okay? So you want to sell on the put side. Sell the 335 and buy the 330. Let's see what that is. Sold 335, you get 392 minus 327. Take that divided by 2 and and divide that by 500. That's 6.5% potential return on the put side. On the call side, you'd want to sell the 435 and buy the 440. 552 minus 470. Divide that by 2. Divide that by 500. That's an 8.2%. Much better on the call side. All right. So if you want to sell the call side, not bad liquidity. For risking $500, that's not bad, yeah? Okay. Next on the list, the UVXY. This is a volatility ETF. These are a lot trickier to trade. I stay away from it. Medical Properties Trust is a $5 stock. We're going to skip that one. Next, we have VXX. That's also a short-term volatility ETF, so I'd stay away from that. They're too tricky. They're too hard. Broadcom, we already looked at that one. That was on our list earlier. Bank of America. So the banks have their earnings coming up in about a month from now. It's a $28 stock. Let's take a look. Maybe we can get in and out really fast. So just to confirm earnings, October 17th. Here's a look at the chart. After this big banking crisis in March, they've never really recovered. On the put side, if you want to sell the puts, can we go out to the November 3rd? Is there enough liquidity? There's kind of 4-cent spread. It's not the best. If you went back to the October monthly, you have much better liquidity. It's not a lot of time. If you want to sell the 26.5, you sell that naked or buy some protection down here. On the call side, it's going to be really hard to do the call side. I would skip the call side on this one. Okay, back to the list. On the next page, we have the KRE, which is the Small and Regional Bank ETF. We've traded that one before. This doesn't have earnings because it's an ETF. Here's our chart. No bias really to the call or the put side. Again, you can make a move right now, but you'd want to wait till some kind of crisis like there was back in March. The small and regional banks are going to have a lot of trouble as the rates stay higher. But if you wanted to, let's take a look. If you want to go out to November 3rd, not very liquid, not a lot of volume here. So let's stick with the monthly for now. If you want to sell the 39 and buy the 34, let's take a look. So you're taking 48 minus 8, divide that by 2, and divide that by 500, 4% return. I'd skip the put side. We're trying to look for something 5% or higher. On the call side, you'd have to go out to the 45. You don't have to buy the lower call, but if you want to, you can. It's tough. Again, you'd have to wait for volatility to go a little bit higher on these before you make a move, okay? Next, we got Schwab. SCHW. Earnings are October 16th, so it's coming up in about a month from now. Big move down since earnings. Let's take a look. On the put side, for the monthly, sell the 51, buy the 46. That's 59 minus 20. Divide that by 2, divide that by 500. Not even a 4% return. Skip the put side on the call side. Sell the 62 Buy 67. What do we get there? 49. It's even worse, I think. 49 minus 9. Divide by 2. Divide by 500. 4%. Same thing. I'd hold off on that. Can we go out to the 43? Same thing. Not a lot of liquidity. Not a lot of volume. We want to skip that, okay? Next on the list, Citigroup. Same thing with the rest of the banks. Micron. Micron has earnings on September 27th. That's in about 6 or 7 days, so we want to skip that, okay? If there's a big move after earnings that wasn't priced in, then we can go ahead, but for now, let's stay away from earnings if we don't need to. ARM, we've already looked at ARM today. Nikola is only $1 stock. We'll skip that. Tilray, Canopy Growth, all these pot stocks, they're too low. JP Morgan, they've got earnings on October 13th. Let's take a look. Just to confirm, earnings October 13th, okay? Here's the chart. Whoa. Not looking too bad. If you want to sell puts on JP Morgan, let's see what we got. Can we go out to the November 3rd? No. See how illiquid it is? Hardly any volume. Let's go back to the monthly. You want to sell the 138 and buy the 130. Let's see what we get there. 138 is 114 minus 42 divided by 2 divided by 800. That's 4.5% return. That's not great. On the call side, not a lot of room here. Sell the 157.5 and buy the 162.5. Is that even worth it? It's not going to be worth it. All right, next. This is the POT ETF. We're going to skip that. Carnival Cruise Line. It's only a $14 stock. If anything, we'd want to look at Royal Caribbean. That's RCL. Well, that's a $94 stock. When are earnings? Earnings are in November, so that's great. Here's our chart. It's down today, you can see. But the broader market's down as well. On the options chain, and if we can get something in the November 3rd, that'd be great. If not, now same thing, no volume today. It won't be as liquid as the monthly. If you want to sell the October monthly, sell the 85 by the 80. Let's take a look at that. That would be 96 minus 44. Take that divided by 2 and divide it by 500. That would be a 5.2% return. If you sold the put spread on the October monthly, sell the 85 by the 80. You're risking $500 there. That's nothing. On the call side, sell the 105 and buy the 110. Let's do the quick math there. That would be 86. The 110 minus 34 divided by 2 divided by 500. 5% on the call side as well. So you could sell the call or the puts or sell the entire condor. What's nice about this is it is liquid. So in the next couple days or weeks, if you want to roll to November or if it goes against you and you want to close, you can get out of it really fast. But this one's not bad. And the best part of this is earnings aren't until November. Great. Next. Go to the next page here. UNH has earnings on October 13th. It's getting a little close, so we'll skip that one. The XHB, that's the Home Builder ETF. Let's check that one out. I don't know how liquid it'll be. XHB. Here's our chart. Down today. I know KB Homes reported, right? So they're down. Options, can we go out to November 3rd? No. So for the October monthly, if you want to sell the 71 and buy, as you get farther down here, they become illiquid. So sold 71, that's liquid, and buy the 69. It's really tight though. Let's skip the put side. The call side, you have to go all the way out to, it's not really worth it. You'd have to go out and start selling the 81.5 and buying something down here, but same thing, it's not worth it. All right, next. Semiconductor ETF. SMH. Let's see what we got there. No earnings on this one we have to worry about. This big move up, and now it's kind of just channeled. So no bias towards the calls or the puts. Let's see what we have. Can we go out to the November 3rd? Nope. 50 today. That's interesting. On the put side. Let's go back to the monthly. Same thing at this point. When you're 29 days out, just stick to the October monthly, and then in a week or two, if you need to roll to November, or if you close before then, that's great. On the put side, sell the 132 and buy the 125. Let's do the math on that one. You got 118 minus 47. Divide that by 2 and divide that by 700. 5% on the nose. That's like the bare minimum what we're looking for a semiconductor ETF. Then what's nice, you've got a 4-point spread here. 3.6 open interest. That's great. On the call side, sell the either 153 or 154. Sell the 153 and buy the 158 on the call side. Let's do the math. 98 minus 43. Divide that by 2. Divide that by 500. 5.5% return. Or you can do both. Sell the call spread and sell the put spread, risking $500. That's nothing. And you get a 5.5% return on that. Like I said, looking at the chart, you've had this move down recently, but it's not that big. But over the past couple months, over the entire year, it's moved up significantly like the rest of the market. This one doesn't have enough bite for me. Let's skip it. Walgreens. Walgreens has earnings on the 12th and their event on September 21st. TD Cowen's 8th Annual Future Health Conference, EVP blah, 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 will present. It'll probably be a non-event, but the earnings is the bigger issue. We're too close to earnings to do anything right now, so we'll have to wait. If there's a big move after earnings, sure, we'll check it out. Wells Fargo, earnings on the 13th, and they're part of the 23rd Annual Leadership Institute. Oh boy. So let's take a look. The banks will be reporting all of them mid-October, so we don't have a lot of time. If anything, I'd stick with either Citi or JP Morgan or Bank of America. No bias either way on the calls or the puts for Wells Fargo. Just confirm earnings are the 13th. Yes. So you have to keep that in mind. You'd want to be out. I prefer not to hold during earnings. Can we go out to November 3rd? No. No volume, no open interest. Stick with the October and roll. On the put side, sell the 39.5 and buy something down here. I don't know, maybe the 37.5. Not a lot of juice. 34 cents minus 16 divided by 2. Divide that. That's not even worth it. Forget it. Forget Wells Fargo. Let's move on. CanView. We've traded that one before. KVUE. Earnings October 19th. That's coming up in less than a month. Keep that in mind. Here's our chart. This chart's a mess. You'd want to sell call spreads on this one. I wouldn't sell puts right now, but we want to wait for there to be a move up before we sell calls again. I want it to be around 22 before we sell calls again. I would skip this one if I were you. All right, next. A Tesla levered ETF. We'll skip that. AT&T, $15 stock. They got earnings October 19th. It's about a month away, so there is some time, but it's such a small stock. I don't know if it's even worth it. Just confirm earnings are the 19th. Yes, we looked at the chart here. I have no bias either way in the calls or the puts. If anything, I'd sell a call spread. Let's look at the calls. October, nah, too small. Can you go out to November 3rd? No, too small. Let's skip AT&T. What is nice though is the IV rank is 61%. That's higher than most. Next on this list, Super Microcomputer. SMCI. Earnings are Halloween. Got plenty of time there. Here's our chart. They're down 4% today, so that's nice. If you want to sell that on the put side, definitely sell the put spread on this. Some volume, open interest, that's good. You have to go out and sell the 190, buy the 185. Let's do the math on that one. 247 minus 187, divide that by 2 and divide that by $500 of what you're risking. 6% return. That's not bad at all. On the call side, can we beat 6%? These aren't as liquid, but there is some volume. Sell the 272 and buy the 277. Let's do the math on that one. 435 minus 365. Divide that by 2. Divide that by 500. You get better bang for your buck on the call side, even though we've already had that move down. 7% return on the call side, so that's better. Okay? Next, is that it for this list? Maybe. Nike. Nike has earnings on September 27th. That's a week from now. So we'll skip Nike. Delta. Doesn't say when earnings are. DAL. Earnings are October 12th. For me, that's too close. We'll skip Delta. MGM. Let's see when earnings are for MGM. Earnings are November 1st. That's better. Let's take a look at the chart. Had this big move down. Maybe time to sell some puts. Maybe. On the monthly, not great. Either sell the 35 or the 34 and buy one of these if you want to do the spread, or sell it naked, up to you. On the call side, I'd skip the call side. There's not much you can do here. Can we go out to November 3rd? November 3rd, maybe? No, very liquid. What about November next month? If you sold, no. Sell the 34, buy the 30. Maybe. Let's go back. Charge point is only a $5 stock. We'll skip that. Another home builder ETF. We'll hold on that one. Okay, that'll do it for this list. We'll go to one more IV ring scanner through E-Trade here. Volatility. Click on this one first. Meta. Let's take a look at Meta. Earnings for Meta are October 25th, so let's keep that in mind. Had this big move up. They're down 1.4% today. That's not much. Maybe sell the calls spread. You should probably get more on that. On the monthly, can we go out to November 3rd? I think we can. No, not a lot of volume. Let's keep the November 3rd off for now. If you want to go out to the November monthly, if you sold the 345 and bought the 350, just be aware that earnings will be a part of that. If you sold the 345, it's 47 minus 415 divided by 2 divided by 500, 7.2% return there. That's not bad. Okay, on the put side, you want to sell the 245 by the 240. That's 357 minus 269. Sorry, 296. Divide that by 2 and divide that by 500. 6% on the put side. Let's go back to the October monthly. That one might be better. You want to sell the 265 and buy the 260 there. That's 229 minus 170. Divide that by 2, divide that by 500. Same thing, 6% return. I'd sell the October one. On the call side, you want to sell the 322 and buy the 327.5. Do some math on that one. 322, it's 289 minus 213. Divide that by 2, divide that by 500. 7.6% return on the call side. That's even better. If I were you, which I'm not, I'd sell the call spread at 322.5, 327.5 on the October call spread. You get a 7.6% return potentially, okay? Let's go back to Cisco, see how that's doing. Aurora strikes 48. 48 is all the way down here. That's crazy. That'd be one hell of a move. Okay. Back to our scanner. CGen, Bill.com. We already looked at Royal Caribbean. I want to stay away from these ETFs. CarMax. Let's look at one more, then we'll call it for today. DoorDash. Let's look at Enphase. ENPH. All right. Earnings are on October 24th, so let's keep that in mind. Here's our chart. It's gone down a fair amount. It seems to be leveling off, so if you want to sell something on the put side, for the October, on the put side, you want to sell the one... Sell the 111 by the 106. What does that get? 178 minus 103. Divide that by 2. Divide that by 500. 7.5% return if you sell the put spread here. The 111, 106. Not bad liquidity wise. You can get it in out or roll if you need to. On the call side, sell the 140 and buy the 145. Let's do the math on that one. You've got 181 minus 119 Divide that by 2, divide that by 500. 6.2% return on the call side. You're risking 500 bucks. That's not bad. Same thing, liquidity is not too bad. Let's look at the chart really quick. Yeah, I stick to the put side. You get paid more, and yeah, sell the 111, buy the 106. I'm gonna hold on that one. Maybe we'll look at it tomorrow. What does the November monthly look like? Sell the 95, buy the 90. That one might be better. 189 minus 130. Divide that by 2, divide that by 500. That's even worse, actually. No, I'd stick to the October monthly on the puts, but we'll save that probably for tomorrow. I think we'll call it for today. So we opened the Cisco put vertical spread for October expiration with a very far out strike. So we got some time on that one. If nothing happens in the next week or two, we can always roll it to November. But thank you all for tuning in and watching. If you liked what you saw, subscribe. Tell others to tune in every morning at 7:15 a.m. Western Time, Pacific Coast, and the East Coast, 10:15 a.m. Thanks again for watching, and I'll see you tomorrow.